All right, good morning, everybody, and welcome to JWB's Property of the Week. My name is Greg Cohen. I'm so excited that you're here. And what I do is reveal my property of the week for you. And if you're an investor in the Jacksonville, Florida real estate market, you've come to the right place. This is a property that's currently available, and it's something you can add to your portfolio. And if you are an investor who is just kind of starting the process of learning how to invest or exploring the Jacksonville real estate market, or exploring investing with JWB, you're definitely in the right place as well. We do this as a learning opportunity. I break down the investment property, tell you what you should be looking for so that you can act with confidence when the time is right for you to pull the trigger and add one to your portfolio. And if you'd like to join me to actually be there the first time that I reveal the property of the week, it's done on the Not Your Average Investor show, which I get to host with Pablo Gonzalez every Thursday at 12:30 Eastern. So if you want to be the first to know, join us on the Not Your Average Investor show. You can register by going to jwbshow.com, and we would love to have you in the audience there. Today, we're going to be looking over a property. Oh, and thank you to everybody who's joining live on the group and whatnot. I appreciate you being with me. If you have any questions, I'm going to monitor my phone here and try to be able to answer those questions either during the call live or right afterwards. I'll jump right in and answer those questions for you. So I appreciate everybody's attention and involvement here. Today, we're going to reveal the property of the week. It is already rented through 2022. It has rent escalators in place, and it is less than 5 miles away from 55,000 jobs here in downtown Jacksonville. So I'm going to walk you through that property here in just a second. As I share the screens, it is the property at 1202 Lugar Street here in Arlington, which is zip code 32211. It is 1202 Lugar Street, Jacksonville, Florida, 32211 in the Arlington area. One of our 4 neighborhoods that we have been investing in for 15 years that we absolutely love and dominate because it is an area where you can have low prices, high rents, and you're surrounded by jobs. And guess what? That's what we have here. That's why I'm recommending this property for you. As you can see on the evaluation here, there's a lot of information which you can go over. The thing that I want you to always look at first is the reason why you're investing in rental properties. It comes down to risk-adjusted returns on investment. And the 2 data points you want to pay attention to if you're investing with conventional financing is your monthly cash flow on a normal month, which for this property is $189 a month estimated, which is great. And then your total return on investment. So the monthly cash flow is what happens on a normal month, and the biggest thing here is don't get so excited or don't get so bummed that it's $189, whichever the way you look at that. Some people say, wow, that's incredible. $189 a month is fantastic. And then others may say, well, you know what? I don't really get why I invest in rental properties if it's, $189 a month isn't going to change my life, right? And neither of those 2 things is the right way to look at $189 a month. The beauty of rental property investing is that you can invest in an asset, you can take on smart debt, and that asset pays for itself every single month. Because if you're investing in rental properties, the chances are you're going to need to invest in more than one in order to accomplish your goal, your monthly passive income goal, whatever that may be. And so if you need to add 3 or 5 or 10 properties, you need to be investing in an asset that pays for itself every single month, right? The alternative is to go negative cash flow, like most other investments out there. And then if you add 10 of those to your portfolio, it's not going to be so exciting. So when you see $189 a month, think, wow, this is an asset that pays for itself every single month. That is one of the profit centers. Now, there's a lot more profit centers, many more profit centers, actually 5 profit centers. And so that's why I also want you to look at this conventional financing total return on investment, because it takes those other profit centers into account. It takes into account your tax savings, your principal pay down. It also takes into account other expenses that you're going to see along the way as well, including maintenance costs, vacancy costs, and tenant placement fees. So it's a more holistic view. And that 8.66 assumes that there is 0% appreciation. I do that because in order to count on home price appreciation, number one, you need to be investing in a growth market that historically has grown more than other markets, because real estate cycles tend to repeat themselves, and it's most likely that that will continue over the next market cycle. And you need to be investing for a full market cycle. Full market cycle is known to be between 10 to 20 years or longer. So if that is your plan, then you can count on home price appreciation in your return calculations. And it's easy to do that here. We put 0% because I like to underpromise and overdeliver, and because I don't know if you're going to invest for a full market cycle. If you're not, I don't think you should count on home price appreciation. But if your plan is to invest for a 10 to 20 year cycle, then I think you can. And so if you put 4.3% here, which is the historically accurate average home price appreciation rate in Jacksonville, you can see your return on investment skyrockets to over 20%. This is the full picture of why people love investing in rental properties. It's because you get consistency of positive cash flow, and you get the opportunity to have large growth. That's what we're talking about with risk-adjusted returns on investment. That's why so many people love rental property investing. Specifically on this home on Lugar Street, the purchase price is $208,000, 4 beds, 2.5 baths, 1 parking or 1 car garage. This is already rented for an average rent of $14.24. It's on a 2-year lease, and the lease goes through 2022. So this is a great time to talk about rent escalators. We all love the idea of rent escalators, but before I go there, let's just talk about what the most important thing for you is in terms of delivering a return on investment and delivering positive cash flow. It is keeping a great resident in your home for as long as possible. That's it. That means that is a higher priority than even rent escalators. So for me, I'm going to be signing long-term leases. I honestly, if I could have a resident stay for 10 years and I knew it was going to happen and I didn't have to escalate the rents, I would still win. I would still win because I wouldn't have maintenance and vacancy costs nearly as much. But what we're able to do is to get the best of both worlds. And we do it in a way that it also is a great thing for the resident long-term, because residents deep down don't want to move every single month as well. So what we do is we sign long-term leases, either 2 or 3 year leases. If a resident signs a 2-year lease, the second year will come with a $50 rent escalation, which is great for you as the owner of the property. That is going to significantly increase your return on investment. If you're a resident and you take the 3-year option with JWB, we're going to hold your rent consistent for the first 2 years, which is a great thing for you. And then the 3rd year would come with a $50 rent escalation. So that is built into this home here on Lugar Street, and something that will be a win for all involved. You can see property taxes are about a little over $3,000 here. Homeowners insurance has already been quoted for you. And one of the questions we had on the show yesterday was about annual PBTS fees. This is a $500 annual expense that has already been included in your total returns. And people ask, well, what is this? This is an opportunity for JWB to be able to build houses that are going to be positive cash flow, wonderful investments for clients, and to do this on small lots. And to do this, if you don't have city sewer connected, if the city just doesn't offer that at this point, you have to go with a septic tank, which is okay. But the problem is, if you have a small lot, many times septic tanks can't fit on small lots. So many years ago, we figured out the solution to this problem, and it's called a performance-based septic system. Hundreds and hundreds of properties that our clients own and ones that I own have performance-based septic systems. And at the end of the day, it's a great solution, again, to have a septic tank on a small lot. With that comes additional cost. These performance-based septic systems have to be maintained at a different rate. And so we have negotiated down that annual service contract to have that system maintained so that it continues to stay in good working order for you. And we build that into your property evaluation, so you know about it up front. And we make sure that that's built in, so that way it calculates what your estimated return on investment is. And of course, in this property, we can still get over an 8% return on investment, including that. So this is the right way to do it. It's the best way for all involved, be able to create inventory for clients for years and years and years. This is one of the strategies that we use. And we just need to make sure that the deal is good enough that, including that extra cost, it can get over an 8% return on investment, which it does. Lastly here, let's see here. Let's go to Google here. And I want to show you where this property is in relation to downtown Jacksonville, because downtown Jacksonville is the place where we have the highest concentration of jobs, as you can imagine. This is a map of Jacksonville overall. This is the Atlantic Ocean. This is the St. Johns River. And all of these blue dots here are all the properties that JWB owns, we bought. we renovated or built, and we sold those to clients, and we continue to do the management on them. So that is how focused we are in just Jacksonville. That's all we do. And that's how focused we are in the 4 neighborhoods that we invest in. This is the north side up here. This is the west side. This is the south side. And this is the Arlington neighborhood. 1202 Lugar is right here, right in the heart of Arlington. Now, downtown Jacksonville is right here. 55,000 jobs right here. So for the resident who is living there, it's a very high probability for that resident or any resident around here that they're going to be able to just jump on the Arlington Expressway right here, head over the Matthews Bridge, and there's 55,000 jobs right around here. Some of the companies that headline Jacksonville's economic and job front are our 3 Fortune 500 companies. There's Fidelity National Information Services, Fidelity National Financial Services, and CSX. Those are our 3 Fortune 500 companies. Well, guess what? They have headquarters right here in downtown Jacksonville. So there you have it, the property at 1202 Lugar Street. If this is one that you'd like to add to your portfolio, reach out to my team. If you're a current client, just reach out to your portfolio manager and let them know that you'd like to add it. We'll make sure that we get you on the phone and hopefully get this one added to your portfolio. If you're not a client yet, you can schedule a time to speak with my team by going to chatwithjwb.com, or you can just drop a note or a comment here, and I'd be happy to facilitate that call for you. And if this property is sold by the time that you get on the phone with my team, don't worry about it. We have literally dozens and dozens of other properties just like this one. We do the same thing over and over again. So don't worry about that. As long as this model, these returns, the pricing, the rents, everything, the management, as long as that all makes sense, the properties are more or less widgets in my mind. And those can be replaced and we can put another one right behind it. And that's what we do all day, every day. So thank you all for being here on the Facebook Live. I appreciate you guys. I'm going to check out some of the comments here and see if I can help here. Let's see here. Lee, appreciate you jumping in. Said, which of the 4 areas is this property? This is in the Arlington area. And then Lee asked, maintenance is 4% for is outstanding for a septic rental property. Yes, this is built after 2014, and we obviously track all of our maintenance costs across our entire portfolio. And so because this property is built after 2014, we've been able to see that those maintenance costs, even on a septic property, come in at 4%, which is incredible and a great way for us to continue to provide inventory for clients in a market that is getting tougher and tougher to do. Appreciate all of you for being here. Thanks for tuning into the Property of the Week, and I hope to see you guys on the Not Your Average Investor show every Tuesday and Thursday at 12:30 Eastern. Take care, everybody.